What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday out there. Hope you guys are all doing well. Monday is Fundamental Report Day, so we're going to go over the Bitcoin Fundamentals Report that I put out every Monday, the most comprehensive newsletter in Bitcoin. So let's go right over there. I am live streaming on YouTube, Rumble, Twitter, and Telegram, so you guys can go to all those places. Like, comment, subscribe. I'll check the comments throughout. Let's dive into it. So, okay, Bitcoin Fundamentals Report 308. Quick navigation to jump to the different parts that you'd like. Also, I'm extending this month's price forecast competition one more day. So if you guys want to sign up to become a paid member, I will accept entries into our price forecast competition until midnight tonight. That is the 7th of October. It's $5 a month. You can join the price forecast competition and have a chance to win $20 in sats. Oh, that reminds me, DM me on Telegram so I can get you the sats for last month. But anyway, okay, so I'm extending that one more day. You guys can jump into that. Okay, snapshot of Bitcoin. Snapshot of Bitcoin. Weekly trend, bullish still, above the 50-day moving average. We were above the 200-day moving average earlier today, but we have since fallen below that. We'll take a look at the live chart down below. Media sentiment is very positive. I could have put positive. This is not scientific. I could have put just positive, but with Blackrock out there shilling Bitcoin, evangelizing Bitcoin in the very same way that we have all been evangelizing Bitcoin, dissing on the dollar, showing the 100-year chart of the dollar's purchasing power. That is very positive in my opinion. So I had to put very positive. Network traffic is low. Mining industry, low revenue, but they are holding in there. Hash rate is recovering decently right now. Price section, 63,252 at the time of writing. Last week, we only went down $50 week to week, or issue to issue, I should say. This week, we only went down $150 issue to issue. So it's been extremely flat price for the last 2 weeks here on the Bitcoin Fundamentals Report. Market cap is sitting still right around the $1.25 trillion mark. Satoshis per dollar, 1580. One finny, that's 1/10,000th of a Bitcoin, right in the middle of the decimal places. So it's easy. It's a very easy unit to remember. That's $6.33. Previous mining difficulty was about 12 or 13 days ago, negative 4.6%. We fell from all-time high down by 4%, but we are estimated to have a 3.8% rise in difficulty over the next, I think it's just over a day now, like 25 hours away. Mempool is sitting at 99 megabytes when I checked it. Fees for the next block, again, these are variable, but when I checked it, 62 cents to get in the next block, or 7 sats per virtual byte. The low priority fee was 53 cents. Lightning Network, the capacity fell this week down to 5,200 Bitcoins, or 42 Bitcoins difference from last week. Channels also fell by 0.3%, down 140 channels on the week. So Lightning Network is still kind of bleeding out. Not a lot of excitement. I saw a couple tweets over the last week saying, hey, there's some excitement building for Lightning Network. I hope so, but I will believe it when I see it. Okay. Moving down, let's get into the headlines. Before that, let me check any comments off the bat. See who's with us. BTCP here. Happy Monday. Yes, thank you for the well wishes. I am in Florida. I am on the northeast coast, just south of Jacksonville. So we are not going to be hit directly, but there is going to be significant storms, significant wind and rain all across Florida. I have relatives both in Tampa and Orlando, so they are a little bit more in the direct line of fire. And my in-laws that live in Tampa, in the Tampa area, they are coming to stay with us during this time. So yeah, it's a little bit hectic time here in Florida. I did go through how that's going to affect my content with the guys there on Telegram before we went live on the other platforms, but probably not any Wednesday stuff. I did not get a premium post out last week. Apologies for that. Price, as you can see by the price being flat for the last 2 weeks, there wasn't a ton there to go over really, other than, hey, all the predictions just move them out a week. So, yeah, I will try to get a premium post out to the professional level tier on the website tomorrow. But again, there is a lot of hectic stuff going on here right now, and we'll see if I can get to that. But anyway, that is in response to BTCP. Thank you, Dex Invictus. What's up? Stay safe. Yes, thank you, sir. I know there's a couple of people that watch the show that are also in Florida. I know there's a couple people with Bitcoin Magazine that are also down in the Tampa area. Randy McMillan, if you guys remember him from the Discord community, I haven't seen him around on the Telegram for a while, but he is in Tampa. So I'm wishing all of those guys, they're going to get hit way worse than I'm going to get hit. So wishing everybody stay safe. This is one that you really need to take seriously. I've seen, I was saying on Telegram, I've lived here for 5 years and I've been through at least 5 or 6 hurricanes. This is the one that I think most people, like I've seen people take it the most seriously out of all of them. So, pretty significant situation with the storm surge and stuff. So everybody, I hope, stays safe. All right, let's go back into the newsletter and jump into this first story. So Blackrock is preaching sound money in Brazil. Apparently, this came from a presentation that Blackrock was given. You can see iShares branded slides down there in Brazil. This chart on the left is the dollars purchasing power over the last 100 years. This is something that we have put out for a long time as Bitcoiners, and before that as gold bugs. And BlackRock, never in 100 years would I have thought BlackRock would be doing something like this, but sure enough, they have this chart on there. Also over here, monetary alternatives, which is very important. Kind of how I sell Bitcoin is that Bitcoin is commodity-based money. We're at the end of a giant 75-year credit bubble. If there wasn't Bitcoin, we would go back to gold. We would go back to some sound money. But now, since we have Bitcoin, it's the better alternative, and most likely we will end up there. Do we go to gold first? Do we go to gold and Bitcoin simultaneously in different parts of the world? Maybe. But the people that choose Bitcoin, I think, are going to be the winners. But look, on BlackRock's table here, they have supply, volatility, length of track record, governance, cost to move, and cost to store. Bitcoin has 4 greens. No, neither of the other two have 4 greens. 2 reds. The others have 2 reds, but they also have a kind of medium in there. So Bitcoin is looking really good on this table here. The 2 negatives are volatility and length of track record. But of course, volatility is going to go down as Bitcoin monetizes and gains value. So like Bitcoin at $500, it can be very volatile. You know, it can drop to 100 and go up to 1,000. At 5 million fully monetized, the volatility is going to be much, much lower. It's probably going to be higher than what the US dollar is, but it's not going to be anywhere near what it is today. So this would go down to medium or even low for Bitcoin as we get into a monetized future. So it would be 5 boxes green, and then length of track record. I mean, that can only get green as we go through the process. You know, in 100 years, the length of track record is probably going to be green on this. So there you go. Okay, let's see what I said. This is a slide that you might have seen any Bitcoiner have 5 to 8 years ago. True. BlackRock is the establishment. The impact of this cannot be overstated, in my opinion. People are turning to Bitcoin as a true safe haven asset. The chart on the right, and that's what I just went through. Okay, next headline is IMF is obsessed with Bitcoin. This week, in an IMF press conference, they brought up El Salvador and critiqued them for their Bitcoin policies. Criticized, I guess I should have said. They want to see reforms, including limiting public exposure to Bitcoin. Nayib Bukele laughed it off. A simple case of the existing global Marxist elites trying to stop Bitcoin, but they're about 10 years too late. And you can go and watch this video if you have access. Probably not on the email, but if you click into the website, you can watch that. Okay, next story up for Bitcoin. Bipartisan support builds for strategic Bitcoin reserve. This is from Forbes. I am a contributor to Forbes now myself as well, but this is from Sam Lyman, and it is a pretty good piece. What is he saying in here? Okay, he's talking about the Lummis bill, and we all kind of know about that. It was announced at the Bitcoin conference to buy 1 million Bitcoin and make it into a strategic Bitcoin reserve. But now, and she's a Republican from Wyoming, right? And now we are getting some Democrat support here. So Democrat Representative Ro Khanna, through his support behind the idea, quote, we want to make sure that we have the openness to having Bitcoin as part of the Federal Reserve and as a reserve asset because of its potential for appreciation and because its potential to allow America to set the financial standards. Okay, so obviously this is not the right kind of motive. That's not a Bitcoin motive, but Bitcoin aligns incentives. That's one thing I've been saying for years and years. Bitcoin aligns incentives. So even if they have the wrong motives, the end result is buying Bitcoin and monetizing Bitcoin. So it doesn't really matter. And that, as you know, Bitcoin also changes minds. So as you buy Bitcoin, as you get into Bitcoin, as you care more and you research more, or just read more, whatever about Bitcoin, then you will slowly but surely start changing your perspective and your own motives. Remember, Bitcoin works on the individual. It doesn't work on institutions. So BlackRock actually being so orange pilled now means that one by one, people in BlackRock got orange pilled and slowly started talking about it with each other. And then the entire corporation shifted towards shilling Bitcoin. The same thing will work in the federal government. The same thing works at all the banks. It works on an individual basis. And of course, these politicians, they right now have a job and a motive to see it a certain way. But as they learn, maybe they'll get out of government. Maybe they'll buy Bitcoin and start some other business and get out of government. Who knows? It's going to work on the individual basis. So very interesting. Next story. The Less Noise, More Signal podcast. I was on that last week with Pascal. Turned out to be a pretty good show, so I recommend checking that out, guys. And you can put in the comments that I sent you over there. He's just trying to get this off the ground, and just like I'm trying to get off the ground, but he's trying to get his podcast off the ground. And so if you guys go over there and give it a watch and a thumbs up and a comment, that would be great. I'd appreciate that. Trump promises to pardon Ross Ulbricht. So this was very, very big news. I mean, in the Bitcoin space, it is. You know, we really love Ross and we want Ross to be free. He was wrongfully convicted of these crimes. The crime that he is guilty of is having a website, running a website. And that's the First Amendment right. He should not have been found guilty for things that people do on his website. That would be like holding Twitter culpable for some sort of threats or whatever that were made on Twitter. And hold on one second. All right, sorry about that. So yeah, Ross is, he should not have been convicted, and he got 2 life sentences that are running back to back. So it's way overkill on anything. So anyway, this makes Trump the obvious choice for Bitcoiners, even if he has this DeFi thing that he's running. People learn, people change, and if Trump, obviously, I don't think Trump is going to really fully grasp this. His sons will fully grasp it, and other people around him in his orbit. And they are learning just the way we learned coming into the space. And everyone kind of goes through a shitcoin phase at one point or another. And I think they will outgrow it. So even though he has that on his record, this free Ross thing is huge, and it definitely makes him the obvious choice for Bitcoiners. Okay, macro. Before I get into that, guys, like, comment, subscribe. If you're watching over there on Twitter, I can see 125 people. Jump over to YouTube and Rumble. Like, comment, subscribe over there. Make sure you turn on notifications so you know when I do go live. Okay, Tomek, hi, Florida, stay strong. Yes, sir, thank you. Let's see if there's any in Telegram. Nothing else new. All right, back to it. Let's get back to it. Okay, macro news. U.S. payrolls came in hot. So I linked to a Reuters article. 254,000 jobs added in September was also paired with a revision of plus 72,000 jobs in August and July. At first glance, this is a banger of a jobs report and has caused some movement in the broader market. So things really took off on Friday. This treasury yield, with treasury yields popping higher. So yeah, we'll take a look at the treasury yields. Actually, we should do that right now. I was thinking maybe we can wait until we do the price, but this is for this. Okay. So if you guys are familiar with my content, I talked about down here that when the Fed cut rates, we probably go up, do something like this, and then come back down when people realize that, the Fed cutting rates isn't really going to matter. This broke through the top, obviously. But I think what I underestimated here was the combination with the Chinese stimulus. So the Chinese stimulus and the Fed cutting rates at the same time, basically, it has combined to be an extremely bullish reaction. Now, it's not going to fix anything. Like I said, the Fed is cutting because things are bad, and the Chinese are doing their stimulus because things are bad. But the market initial reaction is going to be to the upside. They're going to be enthusiastic about this. Maybe this will fix the economy. Maybe it will put off the recession. And so this is a market rally. Even though the price of bonds is going down, this is a rally in the yields. That means people are expecting the stimulus to work. But eventually, somewhere up here, let me add to this here. Where's my brush? Somewhere up here, it's going to turn over and come back down. And where that is, I don't know. Maybe that doesn't occur for several months. We are above this multi-month low that I call here now. But anyway, yeah, this is what I'm seeing on the 10-year, and that is kind of due to the Fed, the U.S. jobs report that just came out, and also the Chinese stimulus. Okay, back to the report. The U.S. 10-year hit 4%. Many are saying this is a sign of reacceleration they've been expecting. Of course, the inflationistas say this is a sign of reacceleration of inflation. I mean, there can be some reacceleration of inflation, just like there can be some rise in treasury yields, but that is not the end story. Okay, it's a random walk towards lower inflation and lower yields. But they are going to claim victory, of course, when they're going to claim victory when the U.S. 10-year is 75 bips below the Fed funds rate. Anyway, they say Powell and the Federal Reserve made a massive misstep with their 50 basis point cut. Sorry, but I have to pull cold water on that idea. What is it with some people who scream the Fed is manipulating interest rates too high and will crash the economy, then turn around and say they cut too much and they will reaccelerate inflation? This spike in yields, as well as a spike in other commodities, is likely due to the psychological effects of the Fed cut, plus the China stimulus, plus the jobs numbers. Markets are giving the CCP the benefit of the doubt right now, and they will be able to stimulate the economy, but they won't be. And I will be writing about that to premium members here shortly. We'll take a look at commodities and stuff. Okay, next headline here for macro is Russia to accept mandarins instead of money amid payment difficulties. This is what de-dollarization looks like. So, of course, people like to diss on the dollar and they like to say, oh, all these countries are de-dollarizing. Well, this is what de-dollarization actually looks like, where they're going back to barter. Now, how efficient is this? How efficient can your pricing be in fruit? Not very efficient. And how fast can they be shipped? Very, very slowly. They rot. I mean, this is almost the worst possible type of money. When you think about what would make good money, uh, durability or the inability to rot makes it is a very important property. And they picked pretty much the worst possible thing that they could have used. Let's read from this article of Moscow Times. Russian companies have established a barter trade system with Pakistan to facilitate economic exchanges without the need for monetary transactions. Okay, this shouldn't be without the need. It should be without the support or without the benefit of, because monetary transactions are very beneficial to people. Money is a great tool. When you stop using money, it's not without the need, it's without the benefit of, as they seek to overcome challenges with payments related to Western sanctions on Moscow. The alternative trade arrangement was signed at the first Pakistan Russia Trade and Investment Forum in Moscow, according to the Russian state media outlet TASS. The first Russian company to use this mechanism will be the Astarta Agro Trading, which will supply Pakistan with chickpeas and lentils. Pakistan's Mezke Feemti trading company will reciprocate by providing mandarins and rice. Oh my gosh. I mean, you can see why they want to do this. They're throwing stuff at the wall. If they just had like a semi-decent economist that was brave enough to stand up to them and be like, guys, this is wrong. You need to be using Bitcoin. What the hell are you doing with with using oranges and lentils? I mean, this is ridiculous. Under the terms of the agreement, Russia will export 20,000 tons of chickpeas, while Pakistan will supply an equivalent amount of rice. So that's their pricing: chickpeas to rice at a 1-to-1 per ton. Another contract stipulates that Russia will send 15,000 tons of chickpeas and 10,000 tons of lentils in exchange for 5,000 tons of mandarins and 10,000 tons of potatoes. So, see this pricing? I mean, money, it helps in many different ways, obviously, but pricing is one thing. They have to have different exchange rates now for every single good. That's not a very good way to do a pricing mechanism. But anyway, we'll see how that develops. Next story: local Chinese governments kidnapping entrepreneurs and holding them for ransom. I mentioned this on Telegram. I was just floored when I heard this. This is a truly shocking op ed, and it has been scrubbed now by Deputy Director of the Institute of International Strategy, the party school of the Central Committee of the CCP, Zhao Tiong, called for an immediate cessation of local governments kidnapping entrepreneurs and extorting money from them in a desperate attempt for revenue. He warned, quote, "This practice must be stopped to prevent it from spreading and causing a national economic disaster." I found the full translation on Reddit, and so you guys can check that out. I also linked to it. But this is like, when you read stuff like this, the local governments are kidnapping rich people and holding them for ransom because they cannot meet their budgetary needs. The central committee is telling them, you need to meet these goals. What did they used to do? They used to sell land or lease land, and they would make money off of that. Now, with the property market down, the real estate market pretty much collapsing, there's no way for them to raise money, so they're resorting to kidnapping. The governments chasing entrepreneurship out, especially foreigners, but chase. And who's going to want to really stick their head up and succeed when they have this type of stuff hanging over their head as a possibility? No. This is a game over type of situation. And I think China's in much worse conditions than they want to admit, and that people think. And all this monetary bazooka that they have, the stimulus bazooka that they used, is a sign that things are really, really bad. And now we have governments kidnapping rich folks to extort them. But okay, let's go on to the price section. But let me check and see if there's any other comments here. Today, Musk interview was interesting. Was that the one with Tucker? Yes, about Epstein. Yeah, saw that. I think, of course, they are. They've been trying to brush that under the rug for a long time, ever since it came out. We'll see what happens. I think Musk he's making a big difference for Trump. All the stuff that I see out there for Trump is, poly market jump today. The polls from the pollsters that I like, or that have been accurate in the past, like what's it called? Atlas Intel. They're the most accurate poller in the United States, and they have Trump by like 4 points. So Trump is going to run away with this at this point. Anyway, I knew I should have shorted bonds. Yeah, right at the bottom. Well, be long bonds of in the long term, medium to long term, bonds are going lower. It's just a matter of how soon they get there. Do they have the chickpea mandarins chart? No, they do not have trading view charts of chickpea versus mandarins versus lentils. Can you imagine that, guys? I mean, it's just so hilariously bad. That is what de-dollarization looks like for sure. All right, let's continue here. Going on with the price analysis, so you can join the premium tier. I try to put out once a week, put out some premium content that has overloaded with charts and near term, medium term, long term forecasting and stuff on there, so you guys can check that out. Appreciate everyone that supports there. It's only $15 a month, so it's not as expensive as a typical kind of professional investment letter that you might pay $99 a month for. This is something, it's just a little bit higher than the regular member price. It supports me more, and you get really good, I think, quality and accurate forecasting for Bitcoin and macro in general. Okay, so Bitcoin charts. Last week I said testing the 50-day was unlikely. Oh man, that was a bad call, but it was possible. Well, we did test the 50-day, which held nicely, maintaining overall bullish momentum. So the 50-day is kind of like the 50-yard line for prices. And if you're above it, you're bullish. If you're below it, you're bearish. Right now, you can see we did maintain that 50-day moving average here. Tried to go below it three different days, then went back up to the 200-day moving average. And at the time of writing, when I snapped this, it was above at 63,840. Let's go see what the current price is. And I will bring up the correct moving averages here. 200. And I kind of reset these. So let me get these colors back correct. All right. And so we are still below the 200-day moving average. This is not a very bullish candle right here, but you can see a few of these candles building up to it, and then we broke out. So we'll see what happens the rest of the week. But I do talk about that in the newsletter. So let's get back here. The level to break is the top of the pattern and making a new higher high above 66,500. Once that happens, there's nothing stopping the price from slipping all the way to 70K. So you can see this is kind of the top of that pattern. As soon as we break that at 66.5, there's some liquidity around that mark as well. We could slip all the way back up to 70,000 pretty quickly. Shorts are sweating. Shorts. I missed an S there. At 70,000. will try to defend the 66.5 level again, but they will eventually get squeezed. On the monthly chart, the consolidation at or above the previous cycle high is still an extremely bullish stance heading into the historically explosive Q4. So you can see last cycle, we are consolidating just above it. I mean, this is extremely bullish, in my opinion, here on the monthly. We have been here for 9 months, but we are entering the historically or the typical traditionally bullish period for Bitcoin here, October, November, and December. At this part of the cycle, though, we're not at the end of the cycle. We're kind of in the middle. And 2025, October, November, and December would be the blow off top months. We'll see if that is the case, because each time the halving moves sooner. There's also other things that go on with Bitcoin and with the markets. Like this did hit an all-time high around November, but it was kind of a double top because of all of the leverage in the system, all the bad leverage that was just waiting to get liquidated, and that's what happened on the way down. So each cycle is going to be a little bit different, but they all rhyme, right? They all look similar. U.S. election is less than a month away. The uncertainty surrounding this event is likely weighing on markets, but this is a great opportunity for Bitcoin to climb a wall of worry without building a lot of long exposure for the price to seek out. So you guys might have noticed, right, as the Bitcoin price goes up, people are expecting a big breakout, and so the longs pile on, and that gives these market makers or traders, it makes pushing the price down and grabbing, down a couple $1,000 and grabbing that liquidity, those liquidations of all those longs, makes that very attractive. And so that's kind of what we see here at the end. But if we are climbing a wall of worry with uncertainty, and there's not going to be as many longs coming in during this uncertain period, Bitcoin could just steadily go up without that long liquidation so juicy under the price, so there's nothing to push the price down for. The liquidations are above the price, which is what we will look at now. So the heat map, this is the 3-month heat map. There's about 4 billion, probably up to 8 billion in this zone right here to be liquidated up here at 66,500. And then, of course, 70,000 is the next level up here. And if we look at the 6-month, we can see this is now where that 4 to 8 billion of liquidations are. But look it up here. I mean, this is just intense. Each of these levels is like 20 billion in liquidations. So price could come up here and just slip up to 70,000 very, very quickly. That's what I'm looking at there. So overall, the weight of fundamentals and price pressures are upward. Near-term pressures were quite balanced last week, in my estimation, but this week have turned decidedly bullish with the test of the 50-day holding and breaking back above the 200-day, which it failed to hold that for today, but it will get it back above the 200-day here soon. And the liquidity just really juicy there at 67,000. Hopefully we take that out this week. Okay, that is all the price stuff. Let's get into the mining sector. U.S. government backs lawsuit claiming NVIDIA misled investors on crypto mining revenue. All right, this is the clip from Crypto Slate. I linked to them in the bullet point. I forgot to link here in the source, but okay, let's read a little bit of this right here. According to the lawsuit, investors claim NVIDIA and its CEO misled them about the company's reliance on revenue from Bitcoin mining related sales. They argue that NVIDIA's leadership downplayed the company's dependency on crypto mining despite being fully aware of it. So I guess this would be crypto mining because GPUs are not ASICs, right? They're not used for Bitcoin mining. They would be used for Ethereum before it went proof of stake, or other altcoins that use something that's a GPU mining algorithm. Anyway, the firm's vulnerability became apparent when its revenue declined after the 2018 crypto market crash. In response, look how long this takes, guys. It is 2024. We've had another crypto market crash in the interim here. This is stemming back from 2018. In response, NVIDIA countered that investors relied on fabricated data about its revenue sources. However, investors maintain that their data, drawn from multiple reliable sources, indicates securities fraud. Among these sources are two former NVIDIA employees who disclosed that the CEO was aware of the firm's sales tracking to crypto miners. They also noted that Wang, the CEO, attended meetings where the impact of the crypto mining on the company's revenue was discussed. So, NVIDIA's in a little bit of hot water here. Not going to be a significant lawsuit for NVIDIA. These miners and whatever is probably a pretty small sort of thing, but it's interesting that the SEC and now the DOJ have joined the side of the plaintiffs in this case against NVIDIA. All right, moving on to the next mining story. Russia's Ministry of Energy proposes pull the plug rule for crypto miners. And this is from CCN, Cryptocurrency News or something like that. Anyway, let's read a little bit from that article. Russia's Ministry of Energy is looking to curb the uncontrolled growth. Uncontrolled growth. Very interesting terminology here. That means that's very bullish for Bitcoin mining. Of course, they say crypto mining, but at this point, they're probably talking about Bitcoin and not these GPU miners to prevent power shortages with new energy rules. This follows recent efforts by the Russian government to legitimize mining. So, off the bat here in this first paragraph, we could say this might be something that is simulating the ERCOT stuff down in Texas. And what is the term for that? It's like, when they have either extreme cold or extreme heat and they have to shut it down, there's a certain term they use and I forget what it is. But the Bitcoin miners voluntarily turn off during these power shortages. But maybe they're just trying to feel out some rules around that as well. In Texas, they pay the Bitcoin miners to do it. So it's a win-win for everybody. They get huge amounts of power back onto the grid, unused power available on the grid, and the Bitcoin miners actually get paid. So that is a win-win for everybody. As per local media sources, Russia's Ministry of Energy is seeking to bring new rules that would enable them to cut off Bitcoin miners from the nation's power supply whenever they want. Another thing this kind of this triggers is a lot of the mining in Russia, I think, are on these old Soviet-style hydro plants that are in the middle of nowhere. So they might not even be on the nation's power grid. I don't know. But if I were interviewing somebody from the Russian Ministry of Energy, I would ask them that question. I would say, what about these miners that are out in the middle of nowhere? They're not even attached to the power grid. Do they have to also get, licensed? But whatever. The quote, the uncontrolled growth in electricity consumption for cryptocurrency mining could lead to a power deficit in certain regions. And this has already been noted in the Irkutsk region, Burtyata, whatever, the Transbaikal territory. That is from Putin. So Transbaikal, that's like by Mongolia, I think. Isn't that really deep lake that's over there by Mongolia? So he's saying that this is going to cause this power deficits. I mean, maybe, but they're outbidding. The power companies love it. The power companies absolutely love it. So you shouldn't be going after the Bitcoin miners. Those are the people that you should be incentivizing because it brings more power online. It incentivizes power stations to up their power production, build out, create new power plants. This is very far from causing a power deficit if you negotiate this right, if you incentivize the right parts or promote the right parts, then you would get a huge boon out of this energy production. That's what's happening in Texas, but it's a different type of thought process that goes on there. Okay, continuing on. Furthermore, Russia's new Bitcoin mining rules will reportedly allow individuals to mine without needing to register with the authorities. Those that exceed a certain capacity will have to sign up. So there you go. That is mining rules in Russia. How about hash rate and difficulty this week for the Bitcoin network? Hash rate has recovered, and there is a difficulty adjustment tomorrow that's supposed to be 3.8%. That will not be a new all-time high, but it will be close. This is despite the languishing price, and when price breaks out, we should see this surge. So recovery in the daily hash rate, that's this lighter color that kind of spikes. This is the 7-day moving average here, and it is rising up as well. That might be a 24-day moving average. I don't know, because it does seem to be pretty close to the difficulty adjustments, which would be, uh, you know, a longer moving average than a 7-day. But anyway, that is looking good. It's going to be positive, but not back to an all-time high. But that could shortly fix itself. Mempool, how about that? This is all the transactions waiting to be confirmed on the network. It has been very uneventful the last several months. Over the last couple weeks, it has been fairly flat with several small periods of heightened activity and fees. Nothing significant to report. So you can see we chewed through all of these multicolored. Each color in this chart is a different level of fee. So this is 1 to 2 sats per virtual byte. This is 3 to 4, 5 to 6. I think it's pretty consistent like that all the way up, but you can see we've chewed through them down here. There have been a couple days where we see some bright colors on the tips when stuff is happening. So some excitement in the mempool, but really pretty uneventful for the last bunches of weeks. So this goes back to August. So this is a 3-month chart. So really for 3 months, it's been very uneventful for the mempool. All right, that's it for mining. Let's go on to layer 2, but let me check my, go up a little bit. Let me check for any comments. Still talking about the chickpeas and stuff. Yeah. Demand response. BTCP, what is that in regards to demand response? Anyway, if that's with the US 10-year, yeah, the rates rise because not because like demand for treasuries falls. The demand for treasuries is fairly consistent. The demand for treasuries does rise when there's bad times because people are searching out for quality collateral. So that is the case, that the demand will go up in bad times, and it will go up so high and so fast that it crashes the market and it makes it illiquid. But the yields going up is not the opposite. Well, it's not that people don't want treasuries. It's that there's other opportunities to use their money, right? Oh, duh. BTCP, you're talking, yeah, energy program terminology. Yeah, for the Bitcoin miners in ERCOT in Texas there, demand response. Thank you very much. Gosh. Thank you. All right, let's move on to layer 2 stuff. This week was kind of a crazy story. So Marathon, the largest Bitcoin miner, public Bitcoin miner, they hold like I think over 20,000 Bitcoins. You guys can correct me if I'm wrong on that. So they're a big time Bitcoin miner, and they are getting tangled up in tokenization. I just don't understand what this is about. This has to be, I mean, unless like I don't know, because this is fiduciarily, for your fiduciary duty, this is extremely bad, but they're doing it anyway, and they're a public company, and they're selling scams. Okay, so if you guys are new to Bitcoin, you're probably not, but let's just say you find this and you made it this far and you're new to Bitcoin. Let's go over here a little bit of what this is all about. So, multi-chain layer 2 network and Duro. A Bitcoiner reads this multi-chain doesn't mean anything like layer 2. Okay, multi-chain network. This is all kind of like uh, obfuscation language. They're trying to obscure something that they're doing here. Multi-chain layer 2 network. There's probably problems with all three of those sections of that don't work. But anyway, let's continue. Incubated by mining firm Marathon, has developed a platform for issuing and investing in real-world assets, RWAs, on Bitcoin. Real-world assets. That's the core or the crux of this issue. But let's read on. The platform, Avant, developed alongside tokenization specialist Vertalo. I mean, come on, guys. Is just talk about Bitcoin. The Bitcoin is so simple compared to all these different names and tokenization specialists. That sounds like tokenomics. Remember when tokenomics was huge back in like 2015, 16, the word tokenomics came about. And then you had all these ICOs trying to take advantage of tokenomics. But this is a tokenization specialist now. Is planning a pilot project to tokenize whiskey barrels. Okay, I missed this. I thought it was actually launched, but this is a pilot program. Guys, if anybody's watching from Marathon, do not do this. This is a scam. This is not very, very bad for your shareholders. Do not do this. According to an announcement shared exclusively with CoinDesk. That's okay, so no wonder some tokenized project is going to share their stuff with CoinDesk. I don't link directly to CoinDesk because they're scammers, but no wonder. Like various other uses of blockchain technology, tokenization has been largely absent from Bitcoin. Okay, this is such a this is so messed up language here. Blockchain is not a technology. Blockchain is the artifact of a functioning decentralized network. Okay? So a decentralized network runs TikTok, next block. What happens to that block? It goes in the blockchain, on the tip of the blockchain, right? Or time chain, whatever you want to call it. And the next block goes on the tip of the time chain. So blockchain is an artifact or the result of a functioning decentralized network. It is not a technology all by itself. This is ridiculous. It exists as a piece of a broader technology. Okay. I mean, I'm trying to think of a good example for this. So, I don't know, like a steering wheel. Okay. A steering wheel, that steering wheel technology is so great. We can put it on all these different things. We can use it for projects that aren't even like cars. But no, the steering wheel is valuable within a cluster of other technologies. And so blockchain by itself isn't some sort of technology. It's part of a bigger whole. That's a bad analogy, but I don't know a better one right now off the top of my head. Anyway, this has begun to change in recent years. Oh, so why does tokenization not come to Bitcoin? Because, oh my gosh, because they're pumping up scams. That's why. They're much easier to do, not on Bitcoin. Okay. So if these scams are coming to Bitcoin, then you know for a fact the altcoin sector is dying a slow, painful death. The reason why these tokens were launched on their own networks is because they could run the scam over there much easier. They could launch a new network. They could have a few people run nodes. Okay. It's really centralized, but it's like a team of maybe there's 20 nodes running. and they can pump out their marketing material. They can say, hey, look at this. They can really change stuff. They could even stop the network and restart it and say, hey, we're just working down our roadmap and we're going to make this thing great. So they launched it on this other network because they could do what they wanted. Now they know that they can't do that anymore. That's not as profitable. It's illegal. So they are now moving on to Bitcoin. The reason why they have been absent from Bitcoin is because they were pump and dumps. Oh my gosh. Okay, so they're trying to introduce smart contracts or facilitated the minting of tokens. So Bitcoin has had smart contracts since the beginning. Smart contracts were invented on Bitcoin, multi-sig, time lock, all these things. Then it wasn't until, there was color coins and stuff on Bitcoin way before Ethereum. And then Vitalik, Bitcoin couldn't change Bitcoin to be what he wanted. So he moved his color coin project to make a whole new network. So he was the original one that went off and did a big pump and dump scam. And that was Ethereum. So a little history for you guys. Anduro wants to avoid taking a real world asset play that exists on the Ethereum and Solana blockchains, networks, come on guys, and simply cut and paste it onto Bitcoin, but instead is looking to offer something that, quote, a Bitcoiner would understand, he said. I mean, that is demeaning, but also very open and honest. Like he's trying to scam Bitcoiners. These aren't going to be Ethereum scam tokens. This is going to be a tokenized real world asset that targets Bitcoiners. And I wonder what that's going to be, guys. A Bitcoiner who wants tokenized treasury bills can easily access that. Okay. We see the opportunity being in these traditional hard industries that are immediately recognizable, such as American whiskey. So he thinks that can tokenize American whiskey barrels and sell them to Bitcoiners because that's something we would understand. It's so crazy. But if you guys have held on this long, the main issue here is you cannot tokenize real world objects. It is not possible. I mean, kind of think about that. Like you have a real world whiskey barrel and you turn it into a token. I mean, is there a magic spell that does that? Is that part of the physical world? Does it physically manifest and change into some sort of NFT? No, it doesn't. Okay. You cannot tokenize real world objects. The token obeys the network consensus. So what you do is you create a token that's separate from the real world asset, separate, not the same, separate. And then the token obeys the consensus in the network. If you get hacked, that token is stolen and going to another wallet. That is the consensus of the network. Okay? That token obeys the consensus of the network. However, physical objects, they obey the consensus of the physical world. What happens if there's a fire at the whiskey plant and your barrel goes burnt up, but you still have your token? Woohoo. No, those things are different, okay? And there you introduce a central party. So again, you cannot tokenize. It sounds stupid to say. It sounds so obvious. You cannot really tokenize a physical world object. It's pretend. You create a token that's separate from the physical world object. Token, object. Now, to keep the consensus, to keep them linked, you have to introduce a third party. You have to. It doesn't work any other way. The real world object and the token must be synced by a central party. Okay, so if you have a central party that's in control of everything, there is no need for a blockchain. There's no need for decentralization or even the pretense of decentralization. It's all a scam. This is a pure marketing scam. Shame on you, Marathon. Shame on you. You need to get the hell out of this immediately. This is you are a public company. You have a duty to your investors and to your owners. You need to stop this tokenization scam immediately. Somebody's going to be the example. You don't want to be that, Marathon. You've spent all this hard time and effort building up 20,000 Bitcoins, and now you're going to risk it all in this scam? Don't do it. Get out. All right. That's my PSA for the day. Let's see what's going on in the comments. Anything? Yes, Marathon needs to take a hint, guys. Stop scamming. Okay, check in Telegram here. Curtailing. Oh, Green, you said curtailing. I think it is demand response, isn't it? I think they were right. Didn't Blockstream launch a mining note? I see the Marathon stuff is way worse. I don't know. Did they? Now that it sounds very familiar, I think I might have reported on that actually about 6 months ago or so. But it was not like this at all. This is a tokenization scam. They were like selling. Oh yes, they were selling. They were using tokens to raise money as to sell hash rate, future hash rate, right? Something like that. But the design of that was not scammy. It was actually like legit tied to future revenue. So that is not a scam. I mean, it might be a security. I don't know if they went through that process or not. But yeah, anybody that's launching this specifically this type of token, and most 99.99% of tokens out there are going to be scams. But anyway, Green says my JPEG is unique. Yeah, NFTs as well. It's the same thing. So NFTs being that you have a physical object, like I guess a JPEG, that's a physical object on a computer in the memory of a computer, right? And that object is not actually connected to the token. They don't, because you can just right click, copy the JPEG. Nothing's stopping it from actually being connected and synced to that signature at all. It's a pure scam. Okay, so that was that. All right, guys. Well, no more comments. Thank you guys for joining me, Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com. 218 people watching, probably most of them over on Twitter. So if you want to jump over to the YouTube or Rumble, the links are in my pinned tweet. I very much appreciate it, guys. Like, comment, subscribe, turn your notification on so that you know when I'm going live. I probably will not be live streaming Wednesday since the hurricane is coming through here in Florida, but hope all the viewers in Florida are safe. Hope you guys are all doing well out there, had a good start to your week, and I will see you guys on the next one. Peace.